Let's talk about the technicals of the market, the medium-term picture. Regan F Homavazir of Darashaw Company perhaps joined in, and they've had a very circumspect view on the market for several months now. Regan, morning, good to see you again. Has the current rally changed your view, or do you think it's just a pullback still which will top out soon?
Good morning, Mutian. First and foremost, let me just clarify that the long-term picture still continues to remain bearish. What you see at the moment is one of a counter trend rally in the larger term picture. This rally at best I think will go up to 54 to 5500. The longer term parameters that have deteriorated during the fall continue to remain bearish.
Good morning. If that is your outlook, what kind of downside risk would you still see present for the market? I mean, do you concur with the opinion that it's still a 4700, 5200 range, or can the market pierce that 4700 mark on the downside?
Well, it's a step-by-step process. So the Nifty will first have to decisively close below 5200 for 4700 possibilities to open up, because 5200 has now become a key support. In the recent price action, there was an island gap there which has been filled, and so we have bounced from there. Now we need to observe whether 5200 is decisively broken. Should it be decisively broken, 4700 is a very bright possibility.
Earlier you had targets on the Sensex which were sub 15,000. Are these targets still in place? These targets, the base might have shifted higher?
The base hasn't shifted higher conclusively. It is very, very difficult to gauge at the moment whether the base has shifted higher, because if should the Nifty cross above 5500, then yes, the base has shifted higher. Failure in the absence of that, we will continue to remain bearish, and sub 15,000 levels are a possibility.
Your notes indicate that you're neutral on the Dow as well, Regan. So when you analyze the charts, both of the S&P and the Dow, what is it that you see, tying it in with what you see on the Sensex and Nifty?
Well, the Dow has been in an uprun, and we had identified this level of 10,600, where the Dow came and rested for a little while, and then has gone on a springing up move. It has come exactly to the resistance of 12,350, and upsides look very limited on the Dow now. Considering that and the Nifty, which looks like it has run into a resistance, we would be very cautious at this current price point.
Do you track the dollar index, Regan, at all, technically?
We do track the dollar index, yes, but it appears very neutral.
By the way, some important news coming in. The Supreme Court panel has apparently allowed 24 companies to mine in 3 Karnataka districts. The trick over here is to figure out which of those 24 companies are included. Remember, it's faces like Jindal Group and of course Goa that had been placed under a ban in terms of mining in Karnataka. So more details awaited on that. Could be potentially positive news for some of these stocks concerned. Regan, just to bring it down to individual stocks and indices, I don't know if you track this one, but a lot of people tend to track the bank Nifty as well to understand where the Nifty itself may be headed. Any thoughts on that, and whether that is looking like it's got downside risk or upside potential?
Well, I would say the Nifty has the downside risk more than the upside potential. Reason being, stocks like Axis Bank, ICICI Bank, HDFC, they've all run into resistances. So with that and the Nifty running into resistance, it's all coinciding with one another. I would be extremely cautious on the bank index too.
But what do you think has the potential to really get the Nifty cracking once again? Can you think of any large cap name which is looking vulnerable technically?
Well, vulnerable technically would be one. Infosys, when we had come previously, we had said Infosys is a long-term buy at about 2200, and that has subsequently panned out to about 2800. Today, Infosys stands there. We are now looking at Infosys, we would say reduce Infosys substantially, because now the downside risk on Infosys is up to 2450. Although the longer picture continues to remain bullish, but Infosys in the interim could be at 2450.
Some of the autos have been strong, Regan, although the moves across the sector itself have been quite disparate. What do you see on the four-wheeler faces which have been strong, like M&M, etc.?
M&M has been a very, very important player, and it is one stock that has surprised everyone. We have been bullish on M&M right from 800 rupees or maybe 750, and we've been continuing with that bullishness. The target is as high as 1200. So M&M is our top pick, and it is one stock that has market fancy, because if you compare it to stocks like Tata Motors and if you compare it to stocks like Maruti, it is in a different league altogether.
What about the start of the last 1 week, HUL? Is that also looking strong technically from a long-term perspective?
Now I think people have started to believe in HUL. We've been touting HUL right from 280 rupees onwards, and we continue to maintain our target of 450 to 600 rupees. It is a stock that needs to be bought on every decline. Reason being is very simple, that it has overall a decade-year-old resistance, and that resistance is very significant. Some very significant developments have taken place chartically. The underperformance of the last 10 years has ended, and now the outperformance is likely to continue. HUL has been one stock which has gained quite significantly in a market that has been very lustless.
The two surprise sectors in October, Regan, included infrastructure and real estate. In fact, many of those stocks actually closed up with 25-30% kind of gains. Anything there that you would go with a long call on, or is that too volatile?
It is too volatile to begin with, and in the larger scheme of things, 25% means nothing in that sector because they've got absolutely decimated. So 25% from the low actually means nothing on the longer term picture as far as real estate and infrastructure is concerned.
So is L&T a weak looking chart to you?
Yes, L&T is a very weak looking chart, but it is a chart that is currently very neutral, although the bias remains negative.
How actively do you track the indications from the volatility indices as well, Regan, both for India and the CBOE VIX?
No, we do not track that.
So below what level of the Nifty would you get convinced that the downtrend is opening up once again? This rally is over.
See, like I explained, it's a step-by-step process. So should 5200 get decisively broken on the downside, the possibility of 4700 opens up immediately, because there's nothing between 52 and 4700 which is any real support. And then if 4700 gets broken down, the 4200 possibility opens up very, very quickly. So we all start getting hinged on to now 5200, because 5200 is something that what the market is looking at now. Considering we had an opening gap, and in technical parlance what you called an island reversal has happened, that gap lower end is 5200. So 5200 will have to be broken for downsides to start aggravated.
Good speaking with you, Regan. Thanks for joining in today. We'll talk soon. That's the news from Darashaw Co.